In this video, I will backtest this Heiken Ashi plus EMA trading strategy by X Trading that apparently gives a 100% win rate. I will test it 100 times with an account size set at $1,000 with 2-to-1 risk-reward ratio. A lot of people have been asking me what backtesting service I'm using. It's called Trader Edge and it's officially the best backtester on the internet. Thousands of new and professional traders using Trader Edge to get an edge on their competition. You can save so much time by testing strategies with Trader Edge. All you need to do is to set up your initial account size and the profit and loss per trade. Trader Edge will give you all the information you need about the strategy, such as the win ratio, the profit and loss, the profit factor, and more. They also got some other useful features on their website, such as the position size calculator, the profit and loss calendar, and the indicators and strategies menu. Here you can find and download some super accurate tools for TradingView and MT4 platforms, and they've all been proven to work. If you're not entirely sure how to backtest, no worries, you will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable trading strategy, no worries, you will also get a full course on how to build a profitable mechanical trading strategy which has a $270 value. And if you sign up right now, they will throw in 4 pre-made high quality strategies that have $100 value. So that's over $470 worth of bonuses all for free, but only if you sign up right now. Trader Edge has a 7-day free trial, so there is literally no risk at all. So go ahead and check it out. I will leave a link in the description below. Okay, for my backtesting I will use Euro USD on a 30-minute time frame. And before we add our EMAs, let's switch the candlesticks from Japanese to Heiken Ashi. Okay, now we need to add 2 exponential moving averages to the chart. And now let's change the length for our second EMA from 9 to 18. Let's also make it colored in yellow. Okay, the strategy is ready. We see it's really simple and we don't have a bunch of indicators on the chart. So let's actually get into the trading rules. Okay, so here are the rules for entering a long trade. First, the 9 EMA has to cross above the 18 EMA. Second, at least one bullish Heiken Ashi candlestick has to fully close above the EMAs after the cross. Once we have that, we're going to be waiting for a bearish Heiken Ashi candlestick that would touch one of these 2 EMAs. However, the candlestick does not have to close below the 18 EMA. And once we have this pullback, we're going to be waiting for a first bullish Heiken Ashi candlestick to confirm the long entry. Our stop loss will be set at the low of the recent bearish candlestick, and we're going to be targeting 2 times the risk. Now let me give you an example where you wouldn't have entered a long trade. So here we can see we had a cross, the 9 EMA closed above the 18 EMA. We have at least one Heiken Ashi bullish candlestick that's not touching the EMAs. We also had a pullback, but the problem is the Heiken Ashi candlesticks closed below this 18 EMA. So we literally skipped this signal. And now, very important rule to understand, we do not wait for the next pullback unless we have a new EMA cross. We see that EMAs didn't cross during this pullback, so this bullish setup wouldn't be valid. The rules for entering a short position are exactly opposite. First, we're waiting for a EMA cross where the 9 EMA crosses below the 18 EMA. Then we need to have at least one bearish Heiken Ashi candlestick that would fully close below the EMAs after the cross. And once we have that, we're going to be waiting for a pullback. This means that the bullish Heiken Ashi candlestick has to touch one of these 2 EMAs. And just like with the long trades, the price action does not have to close above the 18 EMA. And once we have this pullback, we're going to be waiting for a first bearish Heiken Ashi candlestick to confirm the short entry. Our stop loss will be set at the high of the previous bullish candlestick, and we're going to be targeting 2 times the risk. And again, we're going to be ignoring every pullback we have after the first setup. This means that this short entry wouldn't be valid. Okay, let me give you a couple more examples so you have a full understanding of how to trade with this strategy. So let's first start with this bullish setup. We see the 9 EMA crossed above the 18 EMA, and now we're waiting for a bearish candlestick to touch one of these 2 lines. Okay, we see we have a pullback right here. All the conditions are met, so we can safely enter a long position. And we see this trade turned out to be successful. Okay, now we have a valid short setup. We see we had a cross. We had at least one bearish Heiken Ashi candlestick that wasn't touching the EMAs. Then we see we had a pullback. The price action did not close above the 18 EMA, so this is a good setup. But unfortunately, this trade didn't turn out to be successful. Okay, here we have a new EMA cross and a new short setup. We see all our conditions are met. And this time our take profit target got triggered. Okay, I hope you have an idea on how to trade with this strategy, so let's actually do our backtesting and see how well it performs in different market conditions. So, the first backtesting is done and I'm really surprised with these results. The win rate is 64%, which is really high for such a risk-reward ratio, and we also increased our account size by 494.67%. And by the way, I found those 100 setups within 6 months. Obviously, the win rate is not 100% like it was promised in a video, but still, these results are pretty awesome. The profit factor is 3.56 and we had 11 consecutive wins against 3 consecutive losses. So, in the second part of this video, I will try to make some adjustments with the goal to increase that win rate. Okay, in order to do that, we need to add one more indicator to the chart. And this indicator is called volume oscillator. And let's make the line a bit more visible. Also, let's change the time frame from 30 to 5 minutes. Okay, the strategy is ready and now let's understand the trading rules. Okay, so the rules for entering a long position aren't going to be that different. First, the 9 EMA has to cross above the 18 EMA. Second, we need to have at least one bullish candlestick that would fully close above the EMAs after the cross. Then we're going to be waiting for a bearish candlestick that would touch one of these 2 EMAs. And to confirm the long entry, we will need to have a bullish Heiken Ashi candlestick appeared on a chart, and the volume oscillator has to be greater than 0. We see the conditions are met and we can safely enter a long position. Our stop loss will be set at the low of the previous bearish Heiken Ashi candlestick, and we will be targeting 2 times the risk. Obviously, we're not going to be taking any long trades after the first pullback. We're simply going to be waiting for a new EMA cross. Here are the rules for entering a short trade. First of all, the 9 EMA has to cross below the 18 EMA. At least one bearish Heiken Ashi candlestick has to fully close below the EMAs after the cross. Next condition will be to have a pullback where the bullish Heiken Ashi candlestick touches one of these 2 EMAs. And to confirm the short entry, first, the bearish Heiken Ashi candlestick has to appear on a chart. Second, the volume oscillator has to be greater than 0. We see the conditions are met and we can safely enter a short position. Our stop loss will be set at the high of the previous bullish candlestick, and our take profit target will stay the same. And the reason I added this volume oscillator to the chart is to avoid losing trades. Just take a look at how well this losing short trade was eliminated by the volume oscillator. Here's another example where the volume oscillator saved us some money. And this happens over and over again. We see without the volume oscillator, this long trade could have resulted in a loss. Okay, so let's actually do our second backtesting and see if the strategy is any better. Okay, so here are the results after 100 tests. The win rate for the strategy has improved by 3%, and the account growth for the strategy is absolutely insane. So this is literally my #1 strategy on the channel in terms of account growth. The profit factor is 4.06 and we had 11 consecutive wins against 3 consecutive losses. So yeah guys, I highly recommend this strategy. Go ahead and forward test it with a paper money and see how well it performs. Obviously the results will be different when trading live because of high spreads and fees. Okay traders, I hope you enjoyed this video. Don't forget to like it as it really helps with the channel. And if you want to see my #1 strategy on the channel in terms of win rate, check out this video right here.